Over the next few minutes in this video, I'm going to share with you how we pitch investors for private equity capital for the fund that we're building from scratch. We're building a private equity fund from scratch. We're a few months into this, and in order to be able to raise this $50 million fund that we're after, we have to go out and actually talk to people, wealthy individuals or wealthy existing funds, and we have to be able to convince them that this is a deal that will return them capital and that they can get on board with. So I want to break down the few elements that go into this that we have to communicate every time we talk to investors to make sure that we're actually pitching this the right way and that we can get them on board with what we're doing. So the first thing that we key in on for us personally is we really like to talk about what our mission is as a fund. The mission is very important because we want to connect with the investor on an emotional level before we really get into the logistics of things. This is because if we don't have shared values, if we aren't aligned on the same principles, then it might not even make sense for them to be an investor. There might not be a strategic fit and things just might not be fluid going forward. So we want to really get this out of the way first to make sure that they're a good strategic fit for the fund. Now, the next thing that we do is we kind of get into an itinerary of what we're going to talk about. This doesn't take very long at all. This is a slide that you might spend, 30 seconds on or something like that. But you really want to be able to communicate the agenda of what is going to be talked about in this meeting in a very clear and concise way, and just hit on really the key points. Now, I would say in general on the itinerary slide, we're not going over more than like 3 things just to communicate to them what really the core communicative things that we want them to know are. So the next thing that we go over is really what I will call the deal. So the deal is really exactly what it sounds like. The deal is, for us, if you were raising for a specific acquisition or a specific project, this would be your deal. But for us, in our case, if we were raising for a collection of different deals, then we're really talking about what that is there and what we're going after, like what kinds of businesses we're going after or what projects we're trying to fund. If you're a real estate fund, you would be talking about what kinds of real estate deals you're looking for. If you are more into business acquisitions, then you would be kind of talking about what types of business acquisitions you want to make and so forth and so on, the types of projects you're involved in. Now, this is really key because you might have investors that are just not a fit because they aren't interested in the sector you're talking about. Maybe they don't believe in real estate at all and you're a real estate investor, or maybe they don't understand business enough to feel like they could be savvy with it and they would rather invest in real estate. You want to really get this out of the way to make sure that it's something they actually can get on board with and something they find interesting. And a really key point that I'll say here, something I think is absolutely essential, is that you want to be able to communicate not only why it's valuable, I would say why the deal is valuable to them, but also why it's a good time, right? You should understand the market that you're working in, and you should be able to communicate at least these 2 things so that when you talk to them, they feel confident and competent that you're an individual that actually knows what you're talking about in this particular industry, whether it's real estate, whether it's businesses, whether it's some specific project. You should be able to communicate why it's valuable, why it's a good time, and honestly, why it's a good fit for them. Sorry, my chicken scratch is terrible, but you should be able to communicate why it's a good fit for them as an investor as well. So this is where prior research might come into things. Like maybe you know this person ahead of time, maybe they're in your personal network, or maybe there's someone that you're just meeting early on for the first time, or you've known them a little while, maybe they were introduced by a friend or something. This is where having a little bit of prior know-how on the investor themselves is very important, because you should be able to communicate why they would be interested in this particular deal, in my opinion. Now, the next thing that we'll talk about here is, I would say, when you talk about the deal, you want to be able to frame it, right? So I'll just call this part the frame. This is, again, why it's a good deal. You want to be able to communicate why it's a good deal. And so this might be, let's say it was a business that you were looking to purchase, right? For example, if you were looking to purchase an HVAC business, you would want to be able to communicate what kinds of things you've seen in HVAC businesses that make it so that this would be a valuable acquisition. It could just be that it's a growing space. It could be that there's a reason that the project's going to do really well, get a return, or it could be problems that you see in the space. It could be that you know of some really key problems that for whatever reason you are equipped to solve. And that's really the key here. This is the thing I'll kind of key in on, is that when you present this problem, the frame here, what you're doing is you're setting up the knockdown, I'll call it. You're setting up the knockdown. You make this frame very early so that they're thinking about this problem. They're thinking about this thing that needs to be solved, whether it's a problem in the industry or whether it's an opportunity to be capitalized on. They're thinking about that frame from an early on point. Now, the next thing I'll say is you want to be positioned to solve that problem. So if you know that there's a labor shortage in the HVAC space and you have no idea what the hell to do about it, like you have absolutely no clue what you would do to solve it if it was your problem to solve, this is not a frame that you want to set. And honestly, probably a deal you don't want to be looking into. You want to be setting a frame that you feel confident about, something that you can actually tie in to a return for them or a high likelihood that the deal is going to work out well. And that comes down to, you want to have good morals and ethics in this. You don't want to pretend that you can do something that you don't know you can do. Now, the next thing I would say is you want to show kind of like what the terms are, right? This is the next thing that we explain, is I'll say the terms. So aside from what kinds of deals hypothetically you're looking for, let's go back to real estate, for example. With real estate, maybe you would say you are only accepting homes where the owner is willing to seller finance the home in some capacity of some kind, or only accepting businesses where the seller is willing to carry some of the financing over the course of a certain amount of time. This is where you want to get a little bit particular in what kind of terms you're looking for, because again, this just goes back into the frame. You want to be able to show that you're finding good deals. And so this is where your understanding of, the ways that deals are structured, whether it be real estate or business, this is where this is really key. And that's a whole nother subject to cover. But you should be able to understand what types of things will allow for the investment to be profitable. And you should also be prepared to only be able to, capitalize on deals that fit within that term or set of terms, because you're getting interest on this particular thing. So you want to be able to deliver for that on investors. You don't want to go in and, if you're making business acquisitions, you don't want to sell them on the fact that you're going to find only deals that accept 100% seller financing, because that's probably just not realistic. You don't want to say that you can do something and then later down the road you have to deliver on that thing and it's not actually a realistic thing to deliver on. And honestly, you're probably not going to get the investor buy-in in the first place if you're talking about doing something that is not at all realistic. So make it within the terms of actual realistic capability of something that you believe that you can do. The next thing I'll say is, I think that a really good thing to do that I'll add to this as kind of an extension of the terms that we like to do is a specific example. So you don't have to, like, let's go back to the business acquisitions example. If it was a specific acquisition that you've looked at recently or that you're considering going after, this is where you could get a little bit specific. And you don't necessarily have to use the name of the company or the address of the house if you're talking about real estate. This is where you don't actually have to be specific on like what the thing is. You don't want to give away confidential information. But what you could do is, like, if it's an acquisition, you could say, hey, they are 8 years old. It's an 8-year-old company, and they are open to 50% seller financing for the business, and they get their customers organically. And that would be a bonus with that's actually a good example of the types of things we look at. If they get all of their customers organically, we know personally we can plug in some of the personnel that we have behind the scenes to actually drive the needle on that and increase what they're doing. So these are the types of things that you want to show. Like, you want to imagine an actual case study of a business that you would acquire that you're looking at for real, for like as a realistic thing, or a real estate deal that you're looking at, or maybe one that you've done before. Like in our case, for example, although we are starting this private equity company from scratch, we have done closed syndications of deals since about 2017 through one of the partners of the fund. So we have particular case studies that we can look at. I've helped many people sell their businesses, so I know how these things kind of play out. I know what the terms often look like. So this is where you want to actually show a case study to show that you know how these things play out and you're not just thinking in the theoretical. Because for me, like if I think about investing my money into something, I don't want to just invest into something that's theoretical that, in theory could happen. I want to know that I'm investing in something that is likely to happen, and or that there's an actual case for it. It has happened before. So this is where you want to actually tie it in and get realistic with them. The next thing is, I would call this the value creation plan, right? You want to have a plan of how you're actually going to create value post purchase, right? If you're buying businesses, this is post acquisition. If you're buying houses, how are you going to create value by maybe flipping the house? What kinds of things are you going to add to it? This is your value creation plan. And this is where you want to talk about things like they don't have any marketing in the business. We're going to add marketing, and we have this person that knows how to market for this kind of business. They've done it before. Sell them on that. Your value creation plan. This is really key, because if you're just going to go out there and spend their money and not get a return on it, then, me personally, I wouldn't want to invest my money in something like that. You got to sell them on the fact that there is going to be a creation of value after the fact. Now, the next thing I'll say that is incredibly important is the team. So if you're making this pitch, it might be that you're trying to do all of this, as one person. I highly doubt that. And if you are, it's probably not a really realistic, good way to go about it. I would say you really need to round out your team and find people to cover the weaknesses that you have. But this is where you really want to sell them on the team in particular. So the way that we like to do this, just kind of a personal choice, I think of it like I was building a fantasy football team almost, right? Like I want stats. And in particular, the types of stats that I put are things like, deals completed, right? How many deals has this team member completed? How long have they been in the industry or doing what you're talking about? What kind of track record do they have is what I'll call it. So you want to find stats like this that can communicate a likelihood of future success of the project based on already past success. So if you're someone who doesn't have this kind of past success to speak for, this is where, before you even go to pitch, I would say you need to round out your team and actually have good members on the team that can actually be able to communicate that value. Someone where, on paper, their stats on paper, you look at it and you're like, wow, that is a winner right there. That's someone I want on my fantasy football team. That's someone that I know is going to be scoring points, putting points on the board, getting buckets, getting touchdowns, whatever it be. You want their stats to look really good on paper, and you want to be able to communicate their stats really well. And then I really like to spend good time on that, because these are the types of people that, the investor usually is investing more in the person than just the concept. Anyone can come up with a concept, but if they don't believe that you, the person, the team, the rest of you are people that they would want to bet on, then they're not really going to want to invest in this. So you really got to sell them on the team and the stats. And then the next thing I would say is what I'll call, I'll kind of move over to here. The next thing I would say you really want to key in on are what I'll call extras. Extras, I really just mean, things like additional team. So when you initially introduce the team, you really want to talk about your core, really your leadership team. But this is where you would talk about the additional team. Like for us, we have a lot of interns that are helping out. This is where we would talk about the interns. We would talk about people on staff that are helping with certain things. Like if you have someone in marketing that's going to be doing things for you, if you've got like additional service providers. So if you've got consultants that you work with already that can accomplish certain things, these are like the extra little cells and different resources that you bring to the table. The service providers might be lawyers, they might be CPAs. Those are ones that we list. So you really want to communicate all the different pieces that are part of this whole thing, be able to communicate the value there. And then the next thing I'll say is you need to talk about how much money you're trying to raise. So the funds, like how much funds are you trying to raise? What is the ask here? And then the last thing I would say is how, well, I'll just say what the next steps are. You want to talk about what the next steps for this particular investor is. So if you have like a minimum investment size that you're looking for from them, if there's different tranches of investment that you could potentially ask for from them, this is where you actually want to key in on what the next steps are and actually make your ask. This is the very end of the pitch. This is where you're saying, listen, like we've talked about this investment opportunity. We've talked about why it's a good deal and everything. Let's go. Like, you want me to put you down for $100,000, $200,000, $300,000, $500,000, whatever. Like, you make your actual asks and you actually follow up with like where things will move from here. It's also where you would get into like Q&A, and you don't actually know exactly what questions the investors are going to ask, but you're probably going to get feedback here if the answer to whether they want to move forward is not yes. And the reality is you're going to get way more no's than actual yeses. That's just part of the game here. But this is where you really want to put the rubber to the road, so to speak, and figure out whether or not they're going to be investing in this. And your goal here, right? Your goal with the next steps in the Q&A is that you want to get a close. A close in this case, I would say, is just committed capital. If you need a certain amount of money and you're looking for a certain amount of money from them, you want to get a commitment that they will actually contribute that capital. And if you have all your paperwork set up and everything, then potentially even signed paperwork, that could be something that comes after. But this is where you actually want to close them. So hopefully that's been helpful. This is how we pitch investors. This is the structure that we use. This is how we put together our pitch decks. Really, we want to communicate all these different things. So you want to communicate your mission. You want to communicate why they would be interested in, buying into you, what you're trying to do. You want to communicate what's going to happen in the meeting. And then you continue to get into the logistics here. You want to talk about the deal, why it's valuable, why it's a good time, why it's a good fit for them. Talk about the frame you're setting up for the knockdown, I say. So you want to talk about what kinds of deals you're looking for. Then you want to talk about what kinds of terms in those deals that you're looking for and that you're open to. This is where really this is the rule book of like what constitutes a deal you would take, because they don't want to know that, or they don't want to think that you would just take any deal with their money. And you want to talk about how you'll create value with their money, because that's where their return comes from. You want to talk about the team, and then you want to talk about extras, really tie in like who's going to be involved in this, who's going to make this happen, why they should believe that those people can make it happen. Then you want to talk about the funds, really what the ask is, and then you want to try to close them. That's about it. And hopefully that was helpful to you. Again, if you are someone who wants to get involved with the fund, hit the link in the description down below, and you can actually fill out a form and talk to a member of our team, potentially get involved and help out with the fund. Or if you want to invest in the fund, that's something that we're open to as well. Get in contact with us at the same place. If you want to be acquired by the fund, that's something you can check out there as well. But I look forward to seeing you on the next one.